June 10th, 2026. You know, trading is interesting because you can destroy a week's worth of progress in one day if you're not careful. And that's what happened to me today. And we're going to get into it. We're not going to talk about the market as a whole like I normally do. We're just going to briefly look at what's going on. We're in the middle of a sell-off. We know we're in the middle of a sell-off. We've been in this is day 4, okay? So we should be expecting, if we see downward moves as the day unfolds, we should be really hitting hard, and we should be excited to take those trades. You could even say, here's a suggestion for new and developing traders and myself. If you are in an upward trend, you can just straight up forget the short setups that come to you. Just forget them. Don't even take short setups, even if they're beautiful. You're on an upward trend, wait for it to break some critical trend line and then start taking shorts, okay? Whereas in this position, we are in a downward trend right here, right? So while we're in this downward trend, you don't take any longs. Just focus on the short opportunities that come to you. You know, that kind of logic. That's a good place for new and developing traders. Of course, as you get more advanced, no, you can play both sides at all times. But regardless, that's just my thoughts on today. We had a lot of opportunities to make money today, and we're going to get into it. So first of all, let's talk about the pre-market levels. Let's establish some context here. Pre-market levels are extremely critical. So we have, this is NASDAQ, NQ. These purple lines are the weekly critical levels, and then this red line here is the pre-market high. Then we have previous day's high up here, the pink, light red. Then we have the pre-market low, blue, and then the light blue is previous day's low. So altogether you have 6 critical levels, and you will always have 6 critical levels. You'll have 8 actually, because the weekly highs and lows, that's 4. Weekly low, low, and then you have your weekly high and weekly max, right? So altogether you will always have 8 critical levels that you need to be aware of. And they're critical because things look what happened today at the price action. Look what happened. We run up, we run into what? A critical level, the pre-market high from right here. And what happens? We have a rejection through a trend line. This was the entry right here. You take profit here, let the runners continue to run, and you would have had it's just this simple, right? It's a simple play, and it happens all the time. You need to be aware of where these critical levels are. So in the pre-market, we had a very narrow range. We came up, we consolidated down, we hit this level here, and then boom, that was the change in trend during the Europe market session, the EU session. So this level was hypercritical. And then we also mark out the 5 minutes, but basically the 5 minutes before the market opens, you want to mark that range, because that's going to be another range where things tend to happen. But that's extra. All you need to know is there's 8 critical levels, and pre-market low, previous day low, pre-market high, previous day high, and then the previous week's critical levels. 4 plus 4 is 8. You're always going to have those levels. Okay, going back to it. Seeing how this played, look at what happened when we came down to the pre-market low right here. We had a consolidation, a stalling, and then boom, huge pop up. Rejected off of this right before the market opened, that range. We rejected off of that range for like the 5th time today. Look. Came down, consolidated again at this level yet again. That's why you see why I call them critical levels. It's pretty obvious, right? You want to really, when things price action, meaning things, when price action is moving towards these critical levels, you have to pay attention. It's going to give you context and clues for what's going to occur. Okay, let's just get into a few alignment channels that happened. There was many opportunities. I numbered them all. This is the first 8 opportunities that happened today, and then we had a 9th one towards the end of the day. So we're going to talk. Why didn't we have any entries here in the middle of the market? Well, because in the middle of the market, we didn't have an alignment. We didn't have a full alignment. For us to have a full alignment, we want the 1 hour momentum to be in the same region and expanding as everything else. So notice the 15 is in the red and expanding. 1 hour is in the green. So that's why we don't have any alignments going on here. But by the time we get to the last one on the day, number 9, 1 hour is flipping into the red. 15 is building. the 5-minute momentum is in the red. And what happens? Let's see if we can find let's see if we can find a solution. An alignment channel. We want to wait for a tip down in the momentum on the 1 minute or the 2 minute chart. The later in the day, the better it is to use a 2 minute chart. This is a 1 minute chart right here. If you were on a 1 minute chart, this would have been a loss as a short, because it would have come back up to the candle top. And so that's a loss. And then this setup right here would have been a win. That was why I labeled number 9. Now, if you're trading a 1-to-1 system, okay, then you're now break even after those 2 trades. Cool, that's fine. But let's look at what it looks like on a 2 minute chart. Okay, 2 minute chart, you come up. There is no first entry. It weeds that out. There's only one entry, and it's this one right here. And that would have been a win using a 2 minute execution time frame, and the alignment channel being right here. And now we're going to go over the beginning of the market, as there were no other alignments in the middle because of what we discussed. So we're going to go to the beginning. We're going to walk through the market open together with a 1 minute chart. For the first hour of the market, we're going to use a 1 minute chart. And we're going to talk about the differences, see how many alignments we had. So starting at the market open on a 1 minute time frame, here we are. And what happens? We normally don't trade the first 15 minutes, but we're just going to walk through this motion together. So right at the market open, okay, we're going to delete this. This is a 5 minute. I'm not going to delete it. I'm going to turn it down in intensity. 1 second. There we go. So at the market open, you know that you've got 2 weekly critical levels right above us, right on top of us. We have them hovering right there. So anyway, we come down, we have a big buying candle. At this point in time, we have an alignment. Look, the 15 and the 1 hour are going up. The 5 minute is flipping to the upside as we speak. The other 5 minute, the regular hour 5 minute data set, is in the red, so it's a very cautious trade. You might want to skip that one, because you want both of the 5 minute data sets to be in sync. So we move forward in time. Look at the MACD with me. Don't even look at the price action. Look at the MACD right here. So we move forward in time. And look, the very next alignment momentum happens here. Do we have an alignment now? Yes, this 5 minute data set is in the green and expanding. Very powerful. Why is that powerful? Because the 15 is already aligned with the 1 hour. This is where you make your money. That's it. So that was the first setup of the day. 1-to-1, that's a win. Look at it. There was almost no retracement, by the way. Look, barely retraced. The second setup was right here. Why? Look, we tick down and then we tick back up. The momentum ticks back up. The momentum realigns with the higher time frame with the alignment channel. So this as a 1-to-1 would have also worked. Now keep in mind, this is the first 45 minutes of the market, what we've just covered, okay? If you were to look at the first 45 minutes of the market on a 30-second chart, look at the momentum. Look at the same thing, okay? Look at how clean the momentum is shifting and showing you. So why am I saying this? Is because the earlier you are in the market, the first 30 minutes to first 45 minutes of the market, you can apply this momentum alignment principle on a 30-second chart, and you can get some results. So look at that. Look at how clean the momentum pulses are. They're pulses in their harmonic frequencies of momentum aligning temporarily, which creates these pulses that are so clean, where there's almost zero resistance. Let's go back into the next setup here, which is, I marked it right here for number 3, and that was this next one, which would have been a loss. That would have been a loss right there. So far 2 wins, 1 loss. We're up 1. Come down to here, we get another alignment. That's another win. So we're up 2. 3 wins, 1 loss. Come up to this next one. And this one right here is, let's look at the alignment. Right there, that's where it starts. Tick down, tick back up, realignment. And that is a loss. So now we're back to +1. This one here is this is a win, another win. Look at the alignment, checking back to the upside, and it doesn't break the candle's base. It's a 1-to-1 with the candle structure. This is all on a 1 minute time frame for the first hour. We're almost an hour into the market. That's another win. So we're at least up 1, okay? If we've been sizing correctly, we're up 1 or 2. Plus 1 or 2. And the next one is here. That would have been a loss. Now we're basically at 1. And then that very next one was here. That would have won a 1-to-1. That would have been a win. So now we're up basically 2. So through this whole sequence, there's 8 trades here in the first hour, okay? Should you take all of them? No, you don't have to take all of them. Follow your intuition, study, observe. You can trade the whole sequence if you want, and had you done that, yes, you would be up 2R, which is very good. But don't feel like you have to take every single trade. That's ridiculous. What if you have other things going on in your life? Don't subjugate yourself to things like that. One thing to know is this trend line was inevitable. You could see it forming. I marked it. And when it started to break, I really should have taken a position, but it's not in my strategy. It's not in my rule book right now, my playbook. But soon in the future it will be, because man, this was such a clean and obvious situation here, especially when they broke the 84 EMA here. Look at this yellow 84 EMA that I'm about to make much easier to see. Look at this. See how the price action breaks that 84 EMA? Consolidates near it, and then boom, now it's gone forever. Okay, so while we enter the rest of the market, there's one strategy. There was no full alignments until the end of the day. We already covered that last one, so that's all of the alignments today, all of the setups. You would have been up +3 or +4R had you taken every single one of them. So now let's get into one more thing. The other secondary strategy is waiting for the 15-minute to cross over and print. When does that happen? It happens here. Now it's printed to the downside. 15-minute chart has literally printed to the downside, flipping. Now we look. The 5-minute is weak, so already we're kind of not very confident. But we look to see if we can find anything with a 2-minute execution time frame or a 1 minute that would result in a win after this happens. Okay, so here's where we are in this point in time, and look what happens right here. Beautiful 1-to-1 setup. Beautiful win. Right there. So had you taken that, we'd be up +3 or +4R. And then the very next setup, if you apply that same principle, would occur right here, which again was another win. So you'd be up +4, +5R on the day. So, with all of that being said, I'll see you in the next one. Take care.